Hey guys, welcome to Moneycontrol. I'm Manisha Gupta, and metals as a sector continues to perform really well. And within the space as well, there are two gainers or two metals that you must keep an eye on. I'll start with the precious metals first, and the gold prices continue to shine bright. The trend slightly has reversed though, because last year we saw gold not perform so well in dollar terms, but in the Indian markets, because of the rupee depreciation by 10%, the Indian investors actually raked in a lot of profit. This time around, until now in 2023, the gold prices on COMEX have gained up by 4%, while in the Indian markets they are up by just 1%. That is because the rupee is appreciated by nearly 2% since the year end. So we are looking at good gains coming in here. The gold prices also continue to gain up as there are still inflation concerns. We still are looking at the dollar index trading at a 7-month lows. So those are some of the supportive factors there. Also, China has been buying in plenty. For the month of November, they bought something like 30 tons. For December, they bought something like 32 tons. So it has been good going. The Chinese reserves in sense of gold have been rising. Russia, Kazakhstan, various other global central banks also are buying gold. Actually, last year was the best ever since 1980 that you saw central banks buying in case of gold. So the uncertain times and the rising in sense of interest rates clearly has led to a lot of forex coming for the gold there. The markets do believe that going forward, the way China has been buying and the fact that Indian wedding season also kickstarts from the coming weekend will lead to some more physical buying starting here as well. Most people are quite bullish. 1900, $1925 per ounce on the higher side are immediate upside targets for the month of January that you could be looking at being achieved. That's about precious metals. But for the industrial metals, it is copper, which is something that everybody is putting out as their top favorite when it comes to industrial metals. Copper is trading at a 6-month highs on LME in US and in Shanghai, that is Chinese markets as well. We are looking at very strong gains coming in. 4.5% of gains already registered for 2023 till time. That is one because the stocks are on the lower side. The copper smelting in 2022 was the lowest in 6 years. That has been supportive as well. And then when you look at the fact that the overall mine production in South America, whether it's Chile or Peru, also has continued to decline, also has been supportive here. The markets do believe that as China continues to reopen, the kind of stimulus measures that China is putting out are going to be supportive factors. It also is about the EV demand, the fact that the dollar index is trading at a 7-month lows, and the rate hike cycle is expected to peak out anywhere between the first half of this year. That is going to be supportive for copper as a metal and overall metal sector too. Markets will watch out for the U.S. inflation data that comes in tomorrow. That is going to be one major event to watch out for ahead of the U.S. Fed policy in the month of Feb. So, eventful data, eventful week going forward as well. But keep an eye on the fact that while copper has gained up by 4.5%, zinc is gained up by 6% in this year. Aluminum is up by 4% as well. So the metals as a sector has started on a positive note. The speculative buying also seems to be coming in. Many of the fund managers and money managers are reallocating weightages, and metal seems to have found a pretty spot into that too. So good buying continuing into this market. If you were looking to look at your portfolio for this week or the next as well, ensure that you have some amount of glitter, that is gold, and then base metal prices, where it's not just the underlying commodity, but many stocks like Vedanta, Hindalco, Hindustan Zinc also seem to be doing quite well. So whether it's about the underlying commodity or the related equities, all of that seems to be shining quite bright. Thank you.